What's up, guys? This is Carter Thomas with Coin Mastery TV. Make sure you go to coinmastery.com/invest and join the newsletter. Well, today we are talking about a lot of macro stuff within crypto and also what's going on outside of crypto. We are at a very, very important and critical moment, a juncture, if you will, as it relates to the global markets, as it relates to a lot of things happening outside of our little bubble here that I think are interesting and that may have an impact on both the institutional money that everyone is waiting for so patiently, and also just in terms of your own understanding in how this all intersects. And I think this may also help with making better decisions as to what you believe the future of Bitcoin may be, both if you're a long-term diehard holder no matter what, whether you are a long-term trader, whether you're a short-term trader. It's often just a good perspective to get. So we're going to go through that. We're going to talk a little bit about news. And then I want to spend the end talking about a tweet that I made yesterday that I hope brings up a discussion and a conversation that I do not know the answer to, that you guys have awesome ideas about, that together we can try to figure this out, because I think that this is the question for 2018 for a majority of you listening or watching this video. All right, so let's just kick it off. We're looking at Bitcoin here. We're looking on Bitfinex, and I went back to a longer term trend line. This is the kind of the bottom in the 2015 run, just to get a different perspective. I know that, every trend line you get kind of divides the audience here. So I'm just going to throw out different trend lines and see which ones, what kind of conclusions you can get, because you're always going to draw different conclusions. This one, again, coming from 2015, touching the bottom wick here from February. And then you can also see that it touches very closely to the bottom wick that happened last week, or a few days ago, I should say. Now, one thing we were looking at is this 20-week moving average, and I should say a 20-day moving average, not 20-week. And when you look at this, this is really the level that I personally have been looking at, in the idea of it bouncing up, hitting this moving average, and then potentially coming down, or if it breaks through, confirming on top, hitting this downward trend line and being off to the races. That would be ideal. Now, today, it looks like that may not be happening based on a variety of FUD-related things. And so when you draw a trend line, which we can kind of do very quickly here, down, you can see that we are actually, if you just go off the wicks very, very quickly here, I'm drawing a trend line from the 5th of March to the candle on the 24th of March. And you can see that that is providing some level of resistance on this trend, which matches up. If you zoom in, let's go to the hourly here. You can start to see that there is some previous resistance at this point, at this level anyway, at 7,500. The fact that it pushed this price way back down, for anybody who doesn't follow charts much, or, this isn't the style of investing that you're used to, that means that this bull run that we were experiencing the last few days, everyone was starting to get hopeful about, excited about, really did not have the strength that we thought it did. And so for it to reach 7,800, absolutely still possible, but it doesn't bode well that it was rejected so violently off of this 7,500 level, which is a much weaker resistance than what 7,800 would be. Meaning, if it does get to 7,800, the chances of it getting, hit down are rejected, I should say, are much higher. So keeping an eye on that. Really, the next big level to watch, the next big break, is if it sets what's considered if it breaks down below this local low, which is, call it 6,500. If it closes below that, well, we'll go from there. But as it stands, that's what's happening right now. Unexpectedly weaker than people thought. There was a lot of Wyckoff method talk about accumulation that would plow through this and then potentially drive a bigger dip down here. It may look like we are actually in more of an Elliott wave type of situation. So wait and see. I think the big takeaway for most people at least what I'm doing, is this kind of like there are so many unknowns right now in this market, in Bitcoin and altcoins really, that it's really hard to try to trade these swings short term. And if you're going to try doing that, I would definitely encourage anybody to use very, very small position sizing. Use this as an education process. Or if you have very strong conviction on the overall macro direction, you can make a bet that way, but realize that it's going to be a longer term bet than you may think it will be, whether it be long or whether it be short. Meaning, in a nutshell, the people that are going to get screwed the most are the ones that are trying to use leverage on these small volatile swings. You're just going to get liquidated all day, all night. You look at the BitMEX and the Bitfinex APIs on who's getting margin called. It's just wild. So that's what's happening in Bitcoin. And we will see what happens. We're going to keep an eye on all of these things. Now, I want to spend about 3 to 5 minutes on a few other markets. We've been talking about the S&P 500, and I drew a trend line up here that I guess should be a little bit higher off that bottom wick. And we broke down through it. There was a lot of concern. And if we look at this 200 moving average, this was really the big deal, where we broke down through the 200 moving average. But now today we are seeing a bit of a resilient bounce. And so we are kind of hovering over this trend line. This is a very precarious moment in the U.S. equities markets, and I would say just the overall U.S. markets in general. And you can see that there's also this downward trend line. It's kind of creating this big triangle, so to speak. Now, the reason why this matters, the reason why people care is, take that off. One, obviously, we don't know what the correlation is yet between the U.S. stock market or even the global stock market, global equities markets, and Bitcoin. We're not sure yet. There's a lot of speculation that, hey, Bitcoin might be a hedge, but that's not proven yet. And so this is important because if this starts to drop, we're going to have to watch Bitcoin, because I think a lot of people underestimate the pressure this is going to put on Bitcoin. I don't know if Bitcoin is considered a hedge quite yet, the way something like gold would be. And so as this starts to move, whether it moves up or down, it's going to get choppy one way or another. There's a lot of uncertainty, especially with these new trade deals that are going through, or trade embargoes, I should say, tariffs that are happening with China and the US. And watching this sort of thing is going to be a big deal. Now, on a micro level, what matters is that as this stuff starts to change, people's 401ks get smaller. People's salaries might go down. People may lose their jobs. And so the retail investors, many of which are the diehard holders of Bitcoin, they have added pressure that they didn't expect, that it goes beyond being an investor. It's actually about your day-to-day livelihood. And now all of a sudden, instead of Bitcoin being a long-term, I'm going to hold till it goes to 1 million or whatever, you actually have real liquidity and money concerns in your life. That is a real thing that happens to people more quickly and more violently than they often expect. So we're going to watch this thing. Equities are kind of being driven historically been driven by the FANG index, which is Facebook, Apple, Amazon, Netflix, and Google. So those are ones that you really want to watch, obviously, with Facebook. But keeping an eye on this is going to be a big deal as it relates to Bitcoin. Because even if you or I are not totally stressed if this goes way up or way down, I mean, obviously, there's going to be an impact on all of us. Even if this is not a big deal as it relates to holding on to Bitcoin, it is a big deal for a lot of people. And you can't forget that. It's not just about what we individually, the position we're in. It's what everybody is in. And you might not, the tax implications for you might not be huge, but they may be huge for a lot of other people, or vice versa. And so always keeping that in mind. How is this affecting the most amount of people? So you start with equities. Then you go into something like the dollar index, which is DXY. I'm going through this, so if you ever want to check these out on TradingView, you can. and start to see how this is all pieced together. This is really what macro is all about, is kind of how all these different asset classes, how if you pull one lever, what happens to all the other levers? And that's the first question. And the second question is, which lever is going to give you the biggest change in another lever? That's how you actually trade and make money as a macro investor or macro trader even. So you look at the DXY, which is the dollar currency index. That's indexed across a huge basket of currencies around the world. You can see that over the past, I would say 2 weeks or so, it's coiling up a bit, and the dollar has come down in a pretty good way. All right, no surprise here. Look at this, right at previous support from 2010. This is very much related to interest rates, things like that. The trade deals, how the U.S. economy, debt, really gets into the ISLM curves, which you should Google that if you don't know what that means. It's really about like the investment rate, the money supply. The strength of the dollar is a big deal as it relates to a lot of macro. But what also matters is that for anybody out there, if you are liquidating, if you decide to liquidate your crypto and you go to fiat, that's what you got to remember, is that fiat is not like, it's a fixed rate. It's a stable coin, stable currency, but it's not a stable value. That's really important. There is no thing there's no investment anywhere in the world that is a guaranteed store of value that will never fluctuate. Meaning the dollar has gone down 10%, more than 10% in a year. It's 10%, or 12%, I should say, less valuable than it was in January of 2017. So there's a cost of holding fiat the same way there's a cost of holding equities or a cost of holding crypto. So understanding that makes you realize why diversifying assets and making these kind of macro decisions makes a big deal. Similarly, I think oil is going to be a big story as it relates to the dollar. Typically, these tend to move in tandem. The United States it has a lot of oil reserves, but a lot of the money from oil for the U.S. comes from refineries, right? Especially in the South, and from the production of oil. But this is going to be a big deal as it relates to the dollar. And then obviously gold is the traditional store of wealth. Now, many of you may be thinking to yourself, why the heck do I care, dude? Like, which altcoin should I buy? But the reason why you should care is because this Bitcoin chart, not even the Bitcoin chart, the Bitcoin asset class. Bitcoin is one of 50 things that this quote unquote institutional money is looking at. They are not looking at the market the same way you and I are. They are looking at the equities. They're looking at the dollar index. They're looking at oil. They're looking at gold. They're looking at commodities. They're looking at metals. They're looking at all this stuff. And then Bitcoin fits into it. And that is how we need to look at it too, as we make decisions on, is this going to skyrocket? If you think like a big fund, if you think like a bank, like a hedge fund, like private equity, whatever. And that is why I think it's really important to at least begin to understand what this all means, how it all intersects. And slowly, as Bitcoin and cryptocurrencies all kind of merge into this world, they're going to fracture, right? Bitcoin may become a steady asset class, kind of like a commodity. Ethereum, dApps may become more like companies, like equities. Currencies may come out of it. We don't know. But this is really the way that macroeconomists, which tend to be moving large amounts of money for institutions, are looking at this space. Okay, they're not looking at the day-to-day returns by any means. They're looking at how does this correlate to all these others. I think this is going to be a very, very big story, and this is the conversation that institutional money has, other than just, I don't want to miss it, so I'm just going to throw some money at it, OTC, and call it a day. So if you don't know much about that, I would encourage you to check out, just start reading about it, reading about macroeconomic theory. And I'll add some books. If you ever want to see the books, go to coinmastery.com/store. That'll take you to the Amazon store. A lot of it's just kind of good reads about finance and stuff. I'll start to add some macro theory books. Can get a little dense, but it's actually really good stuff that I think you'll be able to get something out of. All right, Let's go over to our good friend CoinMarketCap, and we are down for the day. We are getting back close to that $250 billion level, which is this line. Let me zoom in here to the 3 months. I guess that kind of messes up the... And so you can see that we're hovering right around that $250 billion mark. And in a bear trend like we are, many are hoping for a reversal. But unfortunately, like we talked about, there's not a lot of previous support. So, we're going to keep an eye on this, see what happens with the entire market as it stands. But if we switch over to the Bitcoin volume, not a whole lot of, positive news. Bitcoin took a big tumble. That drew down really pretty much everything across the board. One thing that happened this morning, which is kind of funny, two things. The first, Zcoin just totally skyrocketed. It turns out that Zcoin, I think they took it off already, but CoinMarketCap accidentally listed a Zcash listing, whose market cap is, almost 10x what Zcoin is, maybe less than that, but it's way, way bigger. And so all the bots on Binance picked that up and skyrocketed the price very, very quickly. Dumped, but what was really interesting is as it dumped, it triggered even more bots that were like, hey, there's a huge price drop on this coin. We should rebuy the dip. And now it's starting to, kind of level off. But I think that brings up a huge point, as we are seeing with something like Centra. Now, I've been tweeting about Centra. If you don't know, Centra is a credit card. I believe, the company's still around. We talked about this. Founders were arrested, but, whatever. So it was dumping. People were buying the dip, as you can see. And then this morning, just looking at the 30-minute chart here. So early this morning, last night, I guess, huge volume. You can see this volume. Just massive price spike. And now you're seeing a bit of a sell-off. There's a lot of different ways to look at this. There's the short-term opportunist who looks at this and says, look, every time something dumps like this, it's going to pump back again. We've seen this happen time and time and time again with wallet hacks and things like that, where people emotionally dump it. And then this is no different, where it dumped and then it got pumped again. However, when you look at the volume on this, there is no clearer example, in my opinion, that this is just either a coordinated bot move, a few, maybe even one person, a whale that just decided they're going to pump the price and fulfill the prophecy of all these people that were like either waiting or they bought and they're like, oh, this is actually going to happen. You go into the Centra Telegram group and you'll see what I'm talking about. People are like, this is going to come back. It doesn't matter that the founders got arrested. It doesn't matter that they had fake partnerships. They actually made up fake partnerships with Visa and MasterCard. It's going to come back. And what this means to me is that there is still so many people in crypto. The fact that this kind of volume can be moved around on a coin that is blatantly, has very, very, very little value left is a indicator of how much hope is still left in this market. Now, hopefully that hope can permeate and hold on long enough for the demand of the overall ecosystem, which we're going to talk about in a little bit here. But I don't think this is bad or good. I just think that this is a sign that there's still a lot of the kind of 2017 WTF level of this makes no sense, but it's going up, still embedded in the market, or at least there's a pent-up demand for it. And what I would recommend is do your best not to chase it. I know it's hard not to chase it. More importantly, do your best not to rationalize it, because this is going to stop at some point. This is no longer going to be the case. Things will just dump and there will no longer be a pump. It's going to get hard, less and less of this happening. And that's when you just don't want to be the last person holding the bag who can't get out of the exit. So, do what you want, because, as always, reminder, none of this is professional advice. This is just entertainment purposes. Don't listen to anything I say. just, random dude on the internet talking on a YouTube channel. But this will not continue, and you don't want to be that person. So whatever, it is what it is. Now, interesting news, Mark Karpeles, if I'm pronouncing that correctly, who many of you know is the former CEO of Mt. Gox. Mt. Gox is the famous exchange that got hacked in 2014, that people lost huge amounts of Bitcoin. I mean, like hundreds of thousands of Bitcoin, which is now billions of dollars. And he put up this this Reddit post that was supposed to be an AMA, I believe, it became an AMA, but it's kind of an apology. It's like, look, I don't even want this money, blah, blah, blah. In my opinion, it was kind of a bad, as a marketer, it's kind of, you got to know your audience. And I don't think that people necessarily want an apology as much as they want hey, here's what's happening. Here's what the deal is. And then you list off the apology, but they want transparency more than they want apologies. Typically, that's been my experience. And so, you look at what he wrote, and you don't feel bad for him. How could you? And, but he basically said, like, I don't even want this money. They're going to liquidate me. The government's going to do what they do. But I don't want this. I don't want this money. Whatever. And, he got torn apart, as you can imagine. But the question remains, if this 160,000 Bitcoin does get seized and or liquidated by the Japanese government, who is kind of prosecuting the case, what happens to that money? And that's the big question mark. And that's one of the potential reasons why the price today in Bitcoin is doing what it's doing, is because there's fear that we're going to have another one of these Mt. Gox sell-offs, like kind of calculated sell-offs. Every few weeks, or every few days, I should say, there's just a huge dump on the market to try to liquidate it, especially as we get down to lower prices when, those 160,000 Bitcoin still have a certain value. If price goes lower, the government's got to make that decision. So, it is what it is. I think there's a lot you could take from this, but we'll leave it at that. But that's just one thing. You can go check it out. I'll link to all this stuff. One other piece of news, which really ties into this macro decision-making process, as we mentioned with the SPY, with the S&P 500, with the dollar, U.S. oil, gold. And I've mentioned Amber Baldett, who worked at JP Morgan, running the blockchain projects. She is leaving to go start her new venture. This is not new, okay? I mean, in any time that there's a new emerging market, this sort of stuff happens. This is happening in San Francisco like daily. People leaving venture capital to go start crypto or do an ICO or a crypto fund or whatever. And now you're seeing people leave the banks and go into blockchain, especially people that are close to the blockchain space. But here's what I want to point out, because I think that often the thought process, like the empathy, if I don't know if that's the right word, but the putting yourself in someone else's shoes is the important piece that often gets overlooked in situations like this. Without knowing anything about Amber Baldett or her relationship with JP Morgan or what's going on at JP Morgan, think about what you need to be experiencing, feeling, what your incentives need to be, which is really the key, to pick up and leave and move into a new and potentially competing industry that's very, very emerging. Okay, so you need to be, she's going to work every day. She's leading these blockchain projects. She's working with, I'm sure, very smart people, talking about very interesting things, trying different things. But she has to be running into some sort of friction that JP Morgan is not delivering on, that she sees a potential in the blockchain space. Now, I don't know how entrepreneurial she is, or whether she's going to work somewhere else, or she's going to start something else by herself or with other people. But that's a big deal, to leave the division of a company and go start something new. and this has nothing to do with Amber personal. This is true with everybody. It's true with me. This is exactly what happened to me when I was at a startup to go start my own company, is that you have to get pushed very hard to get out of that entrenched, salary situation and move over. And so there's two things that this means that have nothing to do with Amber or anything. The first is that she sees a lot of potential in the blockchain space. So she's been working on projects. She sees the potential of the blockchain space. And so that is very enticing. That's what many people think. But the other thing is that people often leave because they are in an environment where they cannot thrive, where they're almost being suffocated or pushed down so much, like the pain is so much about staying, that compounds it. So those two things together. And so when you're looking at this, these kind of macro forces of institutional money and the decisions that institutional money is going to be making, and you see news like this, at least in my opinion, the real question is she leaving because she believes in blockchain, or is she leaving because JP Morgan is not allowing her to build out the project she wants? And you got to be able to remove your own bias on that, right? I mean, even the bias of what Cointelegraph says or whatever, and just start to explore that. And you can see other data points. You can start to find people that are working in companies that are working on blockchain projects. Ask them how is the company, what's their take on it? How not even optimistic, but how much are they promoting it? Are they letting people flourish? Last week, I believe we talked about how many of the banks are shelving blockchain projects. That may be a thing that's really getting, pushing Amber incentive-wise to something else. I don't know. Again, I don't know Amber, but that's what I would think about. Beyond just the quotes and the sound bites that you read in the news, because they can get all screwed up. You don't really know the true story, but that is a very, very important piece, is that it takes a lot to leave a very high-paying, very prestigious job in something like New York City to go start in a new industry that's hot, but also very unknown. So in my opinion, this is very bullish. This is a very good sign for this blockchain space, but it may not be bullish for institutional money being excited about dumping cash into blockchain yet. See what I'm saying? So those kind of nuances, that's how you can start to gauge what's going to happen with price as it relates to all this macro stuff. Now, last piece that we'll end on here. Yesterday I tweeted this where I said alt seasons and what drove them, broadly speaking. First alt season from last year, May-ish of 2017. ICOs and the Ethereum needs of ICOs, more people came into the space, which drove more money. Meaning, in early January, Ethereum was, I don't know, let's call it $10. And it started to creep up as these ICOs required Ethereum, and the people that were already in the system were using Ethereum to fund these ICOs. And as the price of Ethereum rose, the media got wind of this. It got people in. They bought Ethereum, and they realized they could leverage that Ethereum into ICOs. That drove it, right? And new people were just signing up like crazy. Second big altcoin wave happened in December. Kind of the same thing with ICOs, but also just like there's so many new people. The sign-up numbers were insane that, yes, many people were doing ICOs and spending money, but it was just like a huge amount of people that came in and were using things like Binance and Bittrex and just buying altcoins in general. So they were buying Bitcoin and Ethereum and all that sort of thing just to buy altcoins. That's why Bitcoin spiked and then altcoins spiked after it, because people needed to buy the Bitcoin first. And then they bought the altcoins chasing the yield, and that's when the bubble came down. And my question is, how does the next altcoin season happen? What gets people to spend more than ever? Or a hint, it's not institutional money. Now, this is obviously my opinion. If you want to learn more about this, go on the YouTube channel, which you may be on. If you're on the podcast, go to youtube.com/coinmastery. Go to the playlist on the homepage called Greatest Hits, and there's a video called When's the Next Alt Season? I walk through the potentials of like logic and emotion and all this sort of thing. But my thesis, I personally don't know what the next thing is going to be. And I'm kind of skeptical, as many of you know. I mean, many of you have like kind of watched the evolution of this channel, and I've become a little bit more skeptical of things like alt seasons, right? Blind bubbles, because, and you guys had some awesome answers. I would encourage everybody to go through. There's hundreds and hundreds of responses to these. I think that the only way we have a really big next alt season where people are just throwing money at stuff that they don't even know what it does, they just know it's going up, is if we get 30 to 50 million new people into cryptocurrency, like going on to exchanges, buying some Bitcoin, Ethereum, Litecoin, Bitcoin Cash, whatever, and then going on to Binance, Bittrex, etc., and buying more altcoins, and then continuing that process over and over, adding more and more cash into it, and just having like basically a bigger version of what we had in December. Because without that, I just don't see how it happens. The only other thing would be like the people that are still in this space take money that was sold or went into the sidelines, and then it gets brought back in. But even that doesn't really take us to like $30,000 or $40,000 Bitcoin or $1 trillion market cap. We just need more people, and that's the question I would have. There's obviously a lot of responses that came through, but ask yourself, what needs to happen for you to be able to have the same sort of conversation that you had last November with friends and family? And I know a lot of you have apprehensive feelings about like, I don't want my friends and family to get involved in this. That's a different discussion, right? Like, I don't know why you wouldn't want people to be involved in crypto. That's kind of antithetical of you being involved in crypto, but that's a different story. But what would get you personally enthusiastic enough to go talking about it, to get people excited about it, to be doing all the things that you were doing last year before the price goes up? Because if you wait for the price to get you excited so that you make the price go even higher, that's when you're talking about like a 2014 2-year bull cycle that just takes a long time. But if we all want this to stay above this trend line, you can't wait for the market to move the price. Like, we as people, as consumers, as holders, as everything, as traders, whatever you want to call it, we need to create the demand curve to bring in the supply, which is what's going to drive the price. Like, keep it in that parabolic channel as opposed to driving it down to the kind of Wall Street bubble curve. And so that's what I would leave everyone with. That's my personal opinion, is that I don't know if there's an answer to this. What I do know is that if you wait for the market to drive the price up before you get excited to go tell 100 people about crypto, we are headed lower. If there is something that will get you excited, even though the price isn't moving, that will go talk to 100 people, the price will go up without going further down. And that is the thing. It's not about institutional money. It's not about big businesses coming in. It's not about any of like someone coming to save the day. It comes down to micro people or micro decisions coming from individuals. I cannot stress that enough. And how many people refuse to accept that fact, that it comes down to you either create the demand yourself or you wait for the price to come up before you feel it, and then you like the hype is driving the demand. And that second one is trouble because of the way this chart looks. So you ask yourself that simple question, and go through the Twitter, the tweet, and check it out yourself. My personal opinion, I think that having a couple coins or a couple of currencies that really do solve problems, I think it's huge. I think that something like, I use Brave browser. Obviously, I don't use it every day on these videos, but I do use it a good amount. That's an example of something I tell a lot of people about, that even no matter what the price is, because I'm like, this thing works, blocks ads, it's fast, whatever. And it helps the ecosystem. And you can go through the list like, want some privacy or, get some Monero or whatever it may be. But what are the things that you could tell people that aren't, it's not about, oh, well, you should get in because you're going to get rich. That's not going to work. It has to be about something that's like real and solves real problems. And if we can get those things soon rather than later, we'll see a lot of new people coming in, and then it may become a self-fulfilling prophecy where we have alt season number 3, and it goes like crazy and people forget about everything that just happened. But it's something to think about. I think it's a really important thing to think about. And so when you wrap all this up, you've really got a lot going on, right? You got the big money, how they're making decisions, which is the macro, how equities, gold, oil, dollar, all that sort of thing happens. You've got the current ecosystem, the holders, the people that are watching these videos, either trying to chase yield through things like, a Centra, or watching the charts every day, or trying to figure out what to do with their portfolio. And then you've got the new people that are not in crypto yet. And you can't forget about those when the price is low, because that is, in my opinion, that's the solution. That's the growth. More people, new money, not just from banks. Bankers coming in and bailing us out of this market too. I always think that's ironic, don't you? It's like, oh, institutional money is going to come save us, but I hate the bailouts that happened. I'm like, you want to get bailed out by banks and what? No, I want like people I know to get in this, and like the people's market or whatever you want to call it. But that's a different discussion. So anyway, always an exciting time. I hope you guys have a great day. Happy Wednesday. I will catch you tomorrow. All right. Peace out.